What if you could trade in half the time and get double the results? Well, in this video, I'm going to be showing you guys how, right? So first of all, you have to understand that in order to achieve the results that I'm talking about, we need to use my algorithm. And very soon, we're going to have a massive platform with all of these things there, okay? Now, the algorithm, especially for those that are now lifetime users, these guys are loving it. I know you guys are loving it because you guys text me all the time. Uh, this is how you're going to be using it. Okay, in this video, I'm going to show you guys how you can use this. And if you guys are interested, especially the guys that are not part of the lifetime offer, you guys can consider getting the lifetime offer after this video. Okay, so first of all, you have to understand that you're mainly going to get access to the algorithm that you're seeing right now on the screen. Okay, and I'm talking about this guy and this guy. Now, these guys, they come with a lot of settings. Yeah, and it also gives you the bias, weekly bias, daily bias, the CRP profiles, and also it will give you the entries. So you can use it as one full dashboard. Okay, that is how the algorithm works. Now, for you guys that are new and that are asking me for help, what you need to understand is this is as intuitive as it gets. It is very easy to actually use. Okay. So all you need to do is basically wait until 3 a.m. Eastern Standard Time. Okay. You're going to wait until 3 a.m. Eastern Standard Time, and then you will get the daily bias. And the weekly bias, you will get it on Tuesday. Okay. Tuesday, or I think it's Monday. Yeah, you get it Monday, 6 p.m. Eastern Standard Time. Okay. Now, what this means, Monday, 6 p.m. Eastern Standard Time is actually Tuesday's price action. So essentially, you will be getting the weekly bias on a Tuesday. Okay. Now, having said that, you understood that, okay, my daily bias comes at 3 a.m. Yeah. So, by understanding this, let's take a look at gold today. Okay. Just to give you a proper understanding of how to actually use this. Yeah. Just to give you a proper understanding of how to actually use this. So, let's not go today because we're cheating since today actually happened already. Let's go to yesterday. Okay. Now, yesterday, if you just take a look at this, yesterday, what we have is we have the London session, 3 o'clock. So we go to 3 o'clock, and at 3 o'clock, what you can see is daily bias is bullish. No, wait, next candle. Okay, daily bias is bearish. We get everything that we need. Yeah. So you can see that it's very user friendly. You get everything by 3 a.m. Eastern Standard Time. Yes, I agree that this can be smaller and this can be smaller. I will be working on it to give you guys an update. Yeah. So having said that, we get the dashboard and now we will also get the entry. So how do we get the entry? We press bearish order flow right there. Okay. Now having pressed bearish order flow, all you need to do is go to the 30-minute chart or the 1 hour chart and wait for price to signal an entry. Yeah. There you go. You get this sell over here. You get this sell over here. You're getting it as price is printing. Yeah. So what you can do, now we know that the sell is over here. So let's go back one candle right there. Okay, so we know that the sell is coming in the next 30-minute candle. How do we know that? Because as the next 30-minute candle is printing, we know that, okay, it says sell, so I'm going to look for sells. So here is how I personally look for sells without giving too much away from my private one-on-one mentorship, right? So first of all, I need to understand volume. Yeah, I can see that the daily bias is bearish. And I can see that as price was heading up over here, the volume was also heading up. So everything is suggesting that this guy over here is the manipulation. So if that guy is the manipulation, all I need to do is wait for price to come into a inverse fair value gap or a CSD candle. So in this case, what is my CSD candle? The CSD candle is in fact this guy right there. Okay. Now, if I remove the CSD candle from the equation, what else can I think about looking at? I can look at an inverse fair value gap. Yeah. So which one is that going to be? This one. Sean, why this one? Because see this high, yeah, high price drop. Okay. Now, having seen this high and having seen this inverse fair value gap, right? If you play this forward, you get the sell over there. Now, when this sell happened, can you see that as price is dropping, giving a reaction, we formed another inverse fair value gap over here. Yes. Now, having seen this inverse fair value gap, what you can do is you can take a sell, let's say here, for example, and you can keep a stop loss above the high. And because you know that the day is going to be bearish, you can target lows. Yeah, we know that the daily bias is bearish, you can target lows. And the daily bias being bearish and you getting a sell and the sell being more than 50 pips, the statistic for that over the past 20 years is 100%. So if we say 50 pips, this is going to be a guaranteed hit. If we say 100 pips, as per my statistical analysis on historical data, it's going to hit. If you say 200 pips, there is an 80% chance, right? There is an 80% chance that 200 pips will hit. To be specific, there is a 86 something percent chance that 200 pip point is going to hit. So let's play this and let's see what happens. Okay, so let's play this. Or another sell over there. And wow, statistics just did everything for me. How can someone show you statistics? Only if they have an objective measure of their concepts. Here you go. And here, I didn't even stop to show you guys this one. Now, if we go back to replay mode, here, we saw that a sell signal came over there. Yeah. How are we going to actually, verify this? Go to the 30-minute and play. There we go. We know that this is going to give us a sell. So what we'll do is we will do this. We ran higher, we dropped, right? So we closed below this guy. So that's an inverse fair value gap. What will you do? You will sell there. So when you sell there, where's your stop loss? Above the high. Unfortunately, but so what? We know that statistically, right? Statistically, we will get 200 pips, 80% of the time. Yeah. But we already have a sell over here. So can we say that this is the 200 pip from the original point? Yes, we can. We can do this. Okay. But Sean, what if I want to test the limits? What if I want to go 200 pips for this also? Okay, do that, but take partials along the way. Take partials here maybe, or take partials at 100 pips. You see that? That, guys, is perfection. This is statistical. Okay? It is going to hit. It is definitely going to hit. Yeah? Now, let's say this. Over here. On this day, the bias was bullish, right? So if you go bullish over here, and if you go back to 3 a.m. Eastern Standard Time, right there. Okay. Now, what we will do is we will wait until 3 o'clock and you can see that the bias is bullish. So now you go to the 30-minute or the 1 hour and you will check and see, or wait rather, for the buy signal. Okay, you're waiting. Oh, where's the buy signal? That means, here you go. So we know that by 10:30, right there was a buy signal. There was no buy signal at all over here. Now we have a buy signal over here. So what you will do is we will go back here. So we know that we are going to get a buy signal over there. We'll go to the 5-minute chart because the 5-minute chart is very important. Okay. Forget these because these are based on the 5-minute chart. Now we're waiting. We're waiting to get a sign of a inverse fair value gap. Now, is this an inverse fair value gap? No. Why? Why is this not an inverse fair value gap? Because we get the reaction and then we fail to close immediately. So what does that mean? It's still reactive. Yeah. So we're waiting. Give me an inverse. Is this the one over here? Yes. Why? How is this the one? Look, this gap is here. See that? We go up, come down. There's a reaction. So that is my inverse gap. What will I do? I will buy. Stop loss. For me, my stop loss will be here. For you, it's going to be here. Depends on your risk management. I'm an aggressive guy, so I'll do this. Okay. Now I know 50 pips is a guarantee, 100 pips is a guarantee, and 200 pips is 80 something percent certain, right? So given that this is essentially the end of the day and the day was seek and destroy, the chances of us getting 200 pips is very, very unlikely. Yeah. So what will I do? Let's start with 50. This is where we will take partials. So let's do this first. We say we'll take partials here. And this is where my full take profit is going to be at 100 pips. Okay. 100 pip point is my full TP. So let's see what happens. So we take partials. For me, I'll take out 60%. Stops at break even. There we go. It's a certainty. When it's right, when all the conditions are there, it's a certainty. Literally. And look, the statistic of 100% is only for that day. It's not for the entire week. So if I kept 200 pips, it should hit within the day, right? It's not going to hit within the day. It's not, because look, we started a new day, right? So this is how it makes everything extremely, extremely, extremely simple. Just by using this algorithm, just by using what I have to give you guys, you are now ahead of 99% of the gurus, 99% of the gurus' students, because if you ask them to code their shit, they can't do jack shit. Okay. So that's pretty much it. I hope you guys finally understood how to use this. If you guys did not understand, you feel free, feel free to sign up on the Google form that I'm going to be linking down in the description below. In that, what you can do is you can just state your Telegram username, your email, and the times of the day or the days of the week in which you are free for a quick demo call where I can show you guys exactly how I use this. And I will send you a Zoom link and we can talk about it on a Zoom call. Okay. And for the guys that understood what's going on, if you are interested in getting this, we only have 2 more spots for the lifetime 50% off offer, which lasts until January. And after these 2 spots are gone, it's going to jump to $400 lifetime until January. And from January onwards, what we do is we are going to switch to a fully, what do you call this, a subscription model. Okay. So that's it. I hope you guys really understood this. If not, remember, you can do what I asked you to do. And if you are doubting in any way, here you go. Here are some testimonials from people that are actually using it right now. In 3, 2, 1, bada bada boom. Okay. Good luck and good trading. Bye bye.